Afternoon, part two of COVID-19 legislation, PPP loan forgiveness. On Friday, as you may be aware, we got the loan forgiveness application published by the SBA, which kind of shed some light on some things, and I still think there's some little things that are still a little murky, but for the most part, I think we can have a game plan now moving forward. So basically just going to update the loan forgiveness and then take some questions. At the back end, you can post them on the Q&A up above. Please don't email them because I will not see them on email. So you can post the questions right on your Zoom meeting. So again, this is just a refresher, and you'll see some things that are highlighted in yellow, and I highlight them either because I think they're important, or two, if they're highlighted and underlined in boldface, it's something that's changed significantly from the last time I did this presentation, I guess, I don't know, a couple weeks ago. So as you know, the PPP program, you can borrow 2.5 times your average payroll for the preceding year, and you did not need to establish that you're able to get credit elsewhere, and no personal guarantees or collateral. We're going to jump through that real quick. Again, the borrower needed to certify that due to uncertainty of current economic condition makes this loan necessary to support the ongoing operations of the borrower. So that nothing's really changed in those first two slides. I still highlight those couple of lines because I still think they're important. However, I think it was Wednesday or Tuesday of last week that we got something that we were all looking for, and especially and this is very beneficial to folks who received a loan less than $2 million, which are generally most of the loans, probably 95% of the loans were under $2 million. But the safe harbor question on the frequently asked questions by the SBA kind of took some of the risk associated with taking the PP money off the table. So essentially they put in there that if you borrowed less than $2 million, you will have deemed to have made the required certification concerning the necessity of the loan request in good faith. So regardless of whether you had additional funding, a large line of credit, large personal savings that you can invest in the business, it doesn't matter. You've met that certification. And of all the business owners that I've spoke to, they felt risk and pressure that I'm not going to jail if I have to keep this money. If I'm going to get this loan and they're going to come down hard on me and I'm going to have legal fees. So there was a lot of clients that were considering giving this money back. Well, this first paragraph essentially says you got a safe harbor, you meet that certification of requesting this loan in good faith, and that's all we need to worry about. So you're good. And I think they did this for a variety of reasons. One, the pressure that borrowers were feeling. And two, the SBA is not going to be able to do extensive auditing of all the loans. So they're going to focus their efforts for folks who got loans north of $2 million. So the folks that are on this Zoom meeting that got loans greater than $2 million, I think this question also took away some of the risk of accepting this money if it is deemed that you shouldn't have got that money in the first place. And if you look at the last paragraph there on the highlighted sentence, if the borrower repays this loan after receiving notification from the SBA will not pursue administrative enforcement or referrals to other agencies based on its determination with respect to the certification concerning necessary of this loan. So as long as you repay it, they're not going to pursue any administration if it's deemed that they didn't meet those certifications. So it kind of takes out the major risk for everybody associated here. And everything that I read and hear from the legal side, and I'm not an attorney, even the publicly traded companies, which is not this audience, the legal community believes that they're going to be, the SBA will be hard pressed to say they didn't meet that definition. So for our clients, the middle market clients, the small business arena, even if you got over $2 million, I see very little risk in you keeping these funds. Now, we'd need to take that on a case-by-case basis, but so I make that statement in generality. So the covered period, as you know, starts with the day the funds are received in the next 8 weeks or 56 days. So, but in this application that came out, they put in an alternative payroll covered period. So borrowers that have a biweekly or more frequent payroll, so biweekly is paid every 2 weeks, or more frequent, I guess, would be weekly, may use an alternative payroll covered period. So they may elect to calculate the payroll costs starting with the first day of the first period following the PPP distribution date. So let's say today you received your money. That starts your normal 8-week period, the covered period. But let's say starting Monday, the following Monday, whatever that date is, that starts a new payroll period that you're going to pay maybe 3 weeks out. You can use that date if it's going to be more beneficial to you because you have more employment as we get later into this this cycle of starting businesses starting to open up, and we're starting to bring back employees. So you can use an alternative date. I think it is odd that they said that you can only use the alternative payroll covered period if you're biweekly or more frequent. I don't know if majority of folks use biweekly or whether they use semi-monthly. My guess is it's probably split down the middle. But if you're monthly payroll, you cannot use the alternative payroll covered period. Only if you're weekly or bi-weekly. The other thing that needs to be stated here is it doesn't change your normal covered period for all of your other costs. So your rent, your interest, utilities, and such. I think the one thing that may be a little murky here, and I got this question this morning, is does that open up the possibility that I can get a third month's worth of health insurance included? And I think it might, although this alternative payroll period is talking about compensation. So hopefully we'll get a little bit more guidance on that right now. So the loan forgiveness is, again, under the section 10106 of the CARES Act. The payments, the loan forgiveness per se, is still going to be forgiven on a tax-free basis. So we're going to talk about the deductibility of the expenses in a little bit. But when the loan is forgiven, it's still going to be tax-free basis. That has not changed. That is important. And this slide hasn't changed from a couple of weeks ago if you were on, what payments are covered in those first weeks. And I say first 8 weeks, also it could be that alternative covered period as well. It's your payroll costs, covered mortgage obligations, covered rent obligations, and covered utilities. The limit of the loan forgiveness is obviously the principal of the loan. You can't get more forgiveness than the loan itself. But I also should say that the maximum amount of your forgiveness is also not just your loan amount. If you don't spend all of your loan amount, your maximum forgiveness is the amount of covered expenses that you have. So if you had a loan of $500,000, you had covered expenses of $400,000, the max that you can get forgiven is $400,000, pending the other tests that we have to hit down the road here in further slides. So the forgiveness amount will reduce if we cut employees during an 8-week period. And we're going to see here in a little bit that we actually got some easing of the full-time equivalents on how we count for full-time equivalents. I think one thing helped us and one thing hurt us, and you'll see that as we go and define an FTE. And the forgiveness could be limited if we cut any salary for some employees during that 8-week period, as well as if any of you have received $10,000 on the EIDL program, that is also going to be forgiven. Your payroll costs, and some of this is repetitive for a lot of you guys that were on the last call, but we may have some new folks on the call, so that's why I'm going over all the costs again and defining those costs. Payroll costs, eligible forgiveness is payroll costs paid and payroll costs incurred during the covered period. Payroll costs are considered paid on the date that the paychecks are distributed or ACH was initiated. The payroll costs are considered incurred on the day that the employee pay is earned. The payroll costs incurred but not paid during the last pay period in the covered payroll period are eligible for forgiveness if paid on or before the next regular pay date. So that line is new in this application. So you can see my bullet point there. Does this open up the possibility of a fifth payroll? And when I talk fifth payroll, that's for you bi-weekly folks. Because what it's saying is, if I get to that end of the 8-week period, I have payroll that's accruing, essentially, that I owe employees, and that I'm going to pay that after the 8 weeks. That tells me that I'm going to be able to sneak in a fifth payroll. That's going to help for two things. One, increase our covered costs, and two, it's going to help us meet that 75% number of our payroll costs. It's not defined specifically in the application about that fifth payroll, but that's my interpretation, that we will be able to include that fifth payroll for biweekly. Within payroll costs, it's payments of compensation for employees, wages, commissions, salaries, not to exceed the annual rate of $100,000. Remember that magic number, right? It's $15,384. So an employee during that 8-week period, or if we use that extra fifth payroll period, let's call it, cannot exceed $15,384. For self-employed individuals, again, it's net earnings from self-employment income up to $100,000. Cash tips or equivalents, vacation, parental, family, medical leave, and sick leave. But don't forget, the folks that are on the expanded federal, the Family Medical Leave Act, and you're getting the credit, those costs will not count as a covered cost. Severance, separation pay, and any retirement benefit. And let's talk about the retirement benefit. I think I've been conservative in my past presentation about the retirement benefit, and saying that if you made a $120,000 profit sharing contribution the previous year, let's make 2 months of that, 2/12 or of that contribution, and put in $20,000 into the plan this year, and that's going to count as your payroll costs. There are some, including some of my partners, that believe that that the entire contribution that may have been accrued for 2019 that you haven't paid yet and you're paying now, that we're going to be able to take that contribution as payroll costs. I think it's open to interpretation at this stage. You're no worse off by paying that money in this 8-week period and taking it as a cost. The worst thing they can do is say, nope, you can't take it. You owe it anyway because you accrued it for 2019. But that is another way that you may be able to get those covered costs up as well. Group healthcare benefits paid, benefit pay, including insurance premiums, and then of course your state and local tax on compensation. So basically your SUTA. Not counted as compensation above 100 grand for any one employee on an annualized basis. Payroll taxes that you match, compensation of employees' principal place of residence is outside the United States. Last time we got a question on if you have an employee who's not a citizen of the United States but working and living in the United States, does their cost count? And their cost does count because they're working and living even though they're not a citizen here. They have to be working here. And I said this earlier, the qualified sick leave time and family emergency leave wages are excluded from covered costs. So I've gotten this question a lot. What about bonuses? So I figured let me put it on the slide and let's talk about it a little bit. It's not defined as allowable compensation, but that doesn't tell me that it's not an allowable covered expense. There's some people who take the position that if you give a $12,000 bonus to an employee, you should only recognize $2,000 of that bonus because it's for the whole year. So maybe you don't use the word bonus internally, but use hazard pay. And if people are working during this period and you're paying people more money, that even though again that's not specifically included, I think that's safer to say that some of that bonus has not been earned yet. I still believe that bonuses paid during this time frame are allowable, but I do like the word hazard pay more. I think it's a little bit more conservative. Coverage mortgage obligation. Within the, as I said last time, I went back to the Act as opposed to reading some of the interpretation of this by the SBA. But within the CARES Act's text, it reads liability of a borrower. A mortgage on real or personal property, and it's now specifically included in the application. Where I think the word that throws everybody off here, and Sam from our office, we went back and forth talking about this a lot, where she think that more interest on a car or equipment is allowable, but if you go back to the text of the Act, it does. But the word that throws everybody off is the word mortgage, right? Because we don't get a mortgage on personal property, but the Act says it's allowed. So I think what they meant in the Act was not mortgage, but they meant loan. And now in the application, the interest on personal property is now specifically in this application as an allowable expense. It's important that that loan was in place prior to February 15, 2020. The last bullet point there, and actually it's now up to 2 banks that I've seen, and I'll name the banks because I don't think they're on the call, and I don't really care if they're on the call because I will argue that interest is allowable. But PNC Bank, when they came out with their documentation to their customers, that interest was not allowable on personal property. I disagree with that. So if you are with PNC, I would still include it, and then we may have to fight for that. I also saw M&T's guidance this morning, and they're not including it. They didn't exclude it, but they didn't include it in what's a covered cost. So my view is it's in the Act, it's law, it's not interpretable in a different manner. So interest on your cars, your equipment, or any other property that's in that business, interest will be allowed for being considered a covered mortgage obligation. Covered rent obligation. I I think, again, this is one of those things that everybody was a little fuzzy on. But I think the act itself was very clear. The act said, within the text of the act that Congress passed, it stated that personal property, so if you leased a copier, if you leased equipment, you leased a car in that business, that is includable as a covered rent obligation. I think the interpretation initially that came out, everybody was coming up with, was real property. I've always believed, looking at the text of the act, that personal property is included, and it's now included in the application. Cover utilities. Again, nothing's changed here. Electric, gas, water, transportation, utilities. I've still yet to find what a transportation utility is. It's not transportation costs. It's not a mileage reimbursement. It's a transportation utility, which I have yet to find an example of. Telephone, internet. Again, remember, all service had to be started prior to February 15, 2020. And trash is not a utility. Eligible non-payroll costs must be paid during the covered period or incurred. So the original lingo didn't say or, it said and. It now says or, incurred during the covered period and paid on or before the next regular billing date. Excuse me, I got confused there. Non-payroll costs. So even if you have utility bills, they're not going to hit within that 8-week period, but it was incurred. That utility bill, as long as it's paid in the proper time frame, is still going to be considered as paid during the covered period. And remember, your eligible non-payroll costs, and I think you guys all know this, is that it cannot exceed 25% of the total forgiveness. So this is it. This slide is what I've been waiting on since this act was passed. Because nowhere in the act, nowhere in any of the SBA guidance has FTE been defined. And a lot of people were coming up with their assumptions. In the Internal Revenue Code, it's 30 hours, and that goes back to the Affordable Care Act. And 30 hours seemed reasonable, because generally we consider somebody full-time for benefits if they're working 30 hours. But in this case, it's not. A full-time equivalent is somebody who works 40 hours or more. For the folks that are working less than 40 hours, we'll divide their hours by 40, and then we'll round it up to the nearest 10th. So if somebody is working 30 hours, they're going to be considered, that's 75% of the time, so we're going to round that up to 0.8, so they'll be considered a 0.8 of a full-time equivalent. I know I've spoken to a lot of folks about this, and over the last few days, and it kind of changed some of their plans. So I have one company I spoke to yesterday that I said I would use this as an example, because they're not as busy, but they retained all their employees because they received this PPP money. For the folks who were not called into the office, they paid 6 hours, and the people who came into the office got paid 10 hours. So essentially hazard pay. So thinking that the people working 6 hours are going to be deemed a full-time equivalent, because that's going to be more than 30 hours, or it will be 30 hours. Well, now that a full-time equivalent is 40 hours, it's not the same. So what I said is change your policy retroactive to say that for the people who are not going to be, that are not going to come into the office, you're going to pay them 75% of their compensation, which translates to 6 hours. They'll be still deemed full-time equivalents because you're paying them their full-time salary, but you reduced it by 25%, which is the maximum we can have before we have a reduction of our loan forgiveness. So there was a workaround. So it's really just kind of the language around your policy that you've set. But it does change some calculations for some companies. Some people who have downsized, not necessarily because of COVID, but they started downsizing at the end of last year. They brought on interns to try to help with the FTE during this time frame, but they didn't have them working 40 hours. So it kind of hurt them. They had them working at 30 hours. So my guess is they're just going to increase their hours to get them up to that full-time equivalent. There is a simplified method. I always get scared with the simplified method. Anytime the IRS or SBA or government says it's a simplified method, it's never really that simple. But you have to figure out whether it's better for you or not. But the simplified method just assigns, one as an FTE for anybody who works 40 hours or more. And all others who work under 40 hours will be deemed a half of a full-time equivalent. To me, the simplified method's probably going to hurt people, but it may not, depending on the makeup of your employment base. So at least you have options to figure out what's the best. Now, in determining your full-time equivalents, you have to do this for the same way that you do it for the covered period, as well as you do it for the base period. The FTE reduction exception. So you'll be deemed to have an FTE as long as you made a good faith effort, written offer to rehire an employee during the covered period or the alternative payroll covered period, but was rejected by the employee because they said, well, I'm making more money on unemployment, or I don't feel safe coming back in. So as long as you make that effort and document that you made that effort and document their response, even though you have not hired that person, that will count as a full-time equivalent. That's making it, because I have a lot of people who are concerned about employees not coming back. The other thing that was favorable to us as borrowers were that any employee who, during a covered period or alternative covered period, that was fired for cause, voluntarily resigned, or voluntarily requested or received reduction of their hours, they're going to be considered an FTE as well. So if you let somebody go because of cause, or they resign because they're relocating for whatever reason, even though you didn't replace that person, that's going to count as a full-time equivalent. So that is very borrow favorable, but you need to document this stuff. And if you look at that slide, you look at the frequently asked question 46. The government is doing everything in their power. They want to forgive these loans. They don't want these loans on the books. So it's giving us a lot of flexibility to get this forgiveness. So this is my same example, and I'm not going to pull up my Excel spreadsheet at all today because I wanted to try to keep it a little shorter today. But in this example, we have $2.4 million of total payroll costs for the period, April 1st, 2019 to March 31st. Average monthly payroll was 200 grand. So they were eligible for 2.5 times that, which is 500 grand. So during the first 8 weeks, the borrows 500,000, incurs payroll costs, mortgage interest and utilities of 440. The 440 is eligible forgiveness. Remember, it's your maximum forgiveness is the lower of the loan or your total covered cost. So in this case, it'd be 440,000. The $60,000 loan will be deferred for at least 6 months and up to a year, and then you have to pay it back over 2 years. The amount eligible forgiveness. is reduced by, again, where we stand in terms of our employment. So if we're at full employment during the covered period, as we were during the 2 base periods that we can choose from, then you're not going to have any reduction of that forgiveness. So jump to the example. We had 30 full-time employees during the 8-week period. After it received $500,000 during that period, February 15th, June 3rd, 2008, it had 50, just as it did from January 1st, 2020 to February 29th. The loan forgiveness would be it would be a reduction of 40% because we lost 40% of our employees. So it's 40. The reduction is 40% of that 440 number. The amount of eligible for forgiveness is also reduced if you lowered anyone's compensation by that's earning less $100,000 or less by more than 25% when compared to the most recent quarter before the 8-week period. So in this example, I have an employee that was earning $70,000 as of March of 2020. After taking out the payroll protection loan, the salary was reduced to $40,000. This was a greater than a 25% decrease in A's wages. Thus, the forgiveness amount of $440 is reduced by another $30,000. So if you do have any pay reductions below 25%, it's really going to hurt you on your forgiveness. And I haven't heard of too many people over 25%. I'm not saying it hasn't happened, but I haven't seen it. So I'm going to spend a little time on this restoration because I think there's some confusion out there on this restoration forgiveness. If we come back to full employment prior to June 30th, that reduction of the loan forgiveness goes away. So in this example here, we had 50 employees before they eventually cut it down to 30. It's just the same example that we just went through. A's salary of $60,000 was reduced to 30 on April 1st. Before June 30th, 2020, X rehires all 20 employees and A's salary is back to 60. The company is entitled to that full forgiveness of 440. But I think the confusion out there is this, is that if you get back to full employment, that the entire loan is forgiven. And that's not true. Remember, it's the lower of the amount of covered costs or the loan. So let's say we totally shut down our business from April 1st to June 25th. We're not paying one employee. So we have no covered costs, but we bring everybody back on June 26th. Yeah, I don't have that a reduction of forgiveness, but I have nothing to forgive because I have no covered costs. So this just helps. The restoration of the forgiveness helps when you have covered costs to ensure that you're going to maximize the forgiveness that you can get by getting back to full employment. It does not say that if I have no covered costs, but I get back to full employment at the end of June, that I'm going to get 100% forgiveness. That's a real, again, a conversation with somebody yesterday. There was a medical practice that thought that they were going to get full forgiveness, even though they don't bring everybody back until the end of June. But they're not going to have any covered costs, so there's not going to be any forgiveness. Application for the forgiveness is you have to make the application within 60 days, and the lender has to make that decision within 60 days of you applying for it. You got to document your number of full-time equivalents during both the base period and the covered period, and you're going to be able to use your payroll tax filings, unemployment insurance filings, canceled checks, invoices, maybe lease agreements for rent, and utilities, invoices for utilities. And you're going to have to make that a certification that the information is true and correct for the amount of the loan forgiveness. So should you pay hazard pay? Again, it comes down to what makes sense for your business. Conversation yesterday. Again, actually, a lot of these questions that I'm going through today is all attributed to one company. Does it make sense to slow down my covered costs if I don't have the employees and not try to manufacture covered costs so that I get a low interest loan for 2 years to help out with other working capital? So there's no right or wrong answer there. It comes down to your individual situation for your company. But I said previously, don't use bonuses per se, use hazard pay if you want to increase your covered costs. Again, do we pay people not to work? There's a lot of companies out there are paying people not to work. That was the intention of this act. They were trying to keep people off the unemployment rolls. But this thing got done way too late, and we've already made those. A lot of companies have already made those plans to terminate people. And then when the forgiveness piece was, for lack of better terms, foggy, people went conservative and let people go. We talked about prepaying the 401k match or the profit sharing, but also if you accrued your profit sharing 401k match for the previous year and you haven't paid it yet, you want to pay it during these 8 weeks. Do you take bank deferments on debts? Again, it's going to come down to your individual cash flow. But if you take the deferment, we can't use that interest as a covered cost. So if you need that as a covered cost, you got to weigh what's more important to you, your cash flow or getting this thing forgiven. Do we ask for rent reductions? I think it's the same thing. It comes down to your individual cash flow. And if you pay the rent, it's more likely going to be forgiven, or at least a portion of it. So you just got to weigh these things for your business. There's no right or wrong answer. And we talked about bonuses, and the most important thing is getting back to full employment, not because you can get 100% of your loan forgiven, but it maximizes what you can get forgiven based on the covered costs that you have paid or incurred. So miscellaneous issues, the folks under $2 million are smiling right now. People over $2 million maybe still sweating it, but I've got a bunch of clients that are over $2 million, and I haven't wavered in that they should have taken that money, and that the certification is still fine. And I think question 46 lessens the risk, because if they deem that you were not supposed to take it, you pay it back. So there's no worse off. You're no worse off by taking that money. So I mentioned this last time. The intent of the act was for these expenses to be deductible. The IRS, and it was silent in the act, so the IRS interpreted it as the opposite, that if you're getting tax-free forgiveness, that the expenses associated with this shouldn't be deductible. So that's the current law or interpretation by the IRS. So I think that's one of the things, one of the potential changes that we may see. And I'm going to go through those potential changes as well. I think this is probably a good place for it. So the potential changes that I see, and I believe they all take a congressional act. So I believe that they may lower that 75% number of that 75% of your loan forgiveness has to be payroll costs. They may lower that. And if you think about it, they should lower it, because how you calculate it was 2 months worth of payroll, which is not 8 weeks worth of pay. It's 8.6 weeks. So apples to apples, if you kept the same employment, you're never going to get to that 75% level. So I think they're going to lower that 75% level. I don't think they're going to lower it as much as some people believe, because they still want to have the intent of this act to be used for payroll. But I do see it coming down to maybe 65, maybe 70%. The third thing that I see as a potential change, and you saw a lot of this, I think it was Monday at the roundtable with the restaurant owners and the president, about the extension of the 8-week period. The Restaurant Association wants 24 weeks, not 8 weeks. And it makes sense for the Restaurant Association, because a lot of them totally shut down. And regardless, they don't have any employees to pay, they're not going to have any cover costs, they're going to have to give the money back. I do see a potential two-tier issue here, in that I think restaurants are going to have more time to pay this, or use the funds, excuse me. And then the non-restaurant industry, I think, are going to get some easing of that 8 weeks, and maybe move that to 10 weeks, maybe 12 weeks. Here's the challenge, though. This takes congressional approval. It's dysfunctional at best down there. So who knows when they're going to approve this? It could be after your 8 weeks, right? We got some people's 8 weeks that are probably going to end maybe the first or second week of June. They're going on Memorial Day recess. The House is not even in session, so who knows when this is going to happen? I have a beer bet with a company that I spoke with today that it will be retroactive, which makes it hard for us as business owners to plan. The accounting for the PPP loan, remember, this is a loan, so it goes on your books as a short-term liability. Well, eventually it'll be part of it, will be long-term, but for now I put it short-term. Any deferred financing costs should be capitalized and expensed over the loan. I don't think you're going to have much of that. Interest should be accrued. Qualified costs continue to go through your income statement. It does not lower a loan. Once the debt is forgiven, then that will be presented as other income on your financial statements. So with that, I'm going to see if I can take some questions. I hope not as much as last time. Hopefully I'm a little bit more clear, and that the act is a little bit more clear. Can you use the first question is, can you use 100% towards payroll costs and still get it forgiven, or only 75%? So it's a good question, right? 75% is the minimum on payroll costs. So if you have a highly labor intensive company, and you're going to get there at 100%, then yeah, that it'll all be forgiven. We use 401k, health insurance, et cetera, in our applications. These are now excluded. No, they're not excluded. They're part of payroll costs. I think they were not supposed to be included in calculating your loan, but they are included as a covered cost. The loan was supposed to be just on your true payroll, your wages times for 2 months, your average payroll for 2 months, but it's still a covered cost. The forgiveness application allows voluntary terms that happen within the covered period to be excluded. Forgiveness application allows voluntary terms that happen excluded. I'm not. I'm going to save that question and go back to it. If you shoot me an email, who gave me that question, I'll have to go back and look at that. All right. If you don't use the entire loan over the 8 weeks, is it still? Can you still request forgiveness on the portion that you do use? Yes. Remember, your forgiveness is your forgiveness is based on the maximum the lower of the two numbers, your covered costs or the loan. So if you don't spend all the money, your forgiveness is going to be based on the covered costs. In the utility category, can we include costs associated with maintaining our virtual desktops? I don't know what that is. We are a technology service company, and the virtual desktop expense is a requirement for form of our services. I'm going to say probably not. That doesn't sound like a utility to me. That sounds like maintenance. Regarding the covered period versus alternative period related to payroll expense, do we need to prorate payroll costs for only the days included in the first 8 weeks, or can we include the full payroll when calculating the forgivable expense? So this is where the answer is no, you don't. They're not saying that you have to. That's where I'm saying that the way I interpret the application is that you potentially can get that 5 weeks in there. So if you do, you're not going to have your first payroll is a couple of days or a week after you receive the distribution, and some of those days were earned prior to the receipt of that money. They're not excluded because you're paying it during that period. Do we need to prorate rent or any other expenses that are paid for a whole month? No. You just you will just take, if you pay your rent on May 1st or June 1st, you get all of that rent. I'm getting a text by one of my staff, so I want to make sure that you guys can hear me. SBA guidance relating to FTEs noted we should not include owner, employees, and partners in our counts. Yet our original application included owners, and they were not expressly excluded when determining FTEs. So I think it's going to be apples to apples, because if you exclude them out of the base period, you're going to exclude them during the cover period. So you're going to get to the same place. I guess your percentage could be by losing a non-owner, you could lose, your percentage could go up a little bit. If you have 5 owners or 10 owners where you have a greater amount of employees, and losing one person, it's not as big an effect. So what you put on the original application wasn't FTEs, it was how many employees you had. So the requirement back then was you had to have 500 or less employees, and it didn't define full-time equivalent then. And because a part-time and a full-time was considered the same thing. We received our loan and hired everyone back immediately. However, we have 2 office personnel that did not return for 2 weeks after the loan due to the fact that we had to construct a new office space in order of social distance. Is there a penalty for keeping these 2 employees on employment for the 2 weeks? Now, I think you're probably going to be fine because you brought them back. We had someone quit so they could get more and I assume unemployment benefits than their workers' paycheck if we aren't able to quickly replace them. So that doesn't hurt you, other than you don't have that covered cost, because they gave us some flexibility that if somebody left on their own free will, they're still going to count as a full-time equivalent. Related party rent, as long as it's a arm's length agreement, I don't see any reason why it wouldn't count. There's nothing in the act that says related party rent is excluded. It's allowed. I received a bill associated with my 2019 rent operating expense reconciliation that needs to be paid now. Can I include that in the rent and the cover period? Yeah, they don't actually define. They don't actually talk about CAM charges. I don't see why I wouldn't include it. I think it's the same theory of if I accrued my pension for last year and I pay it during these 8-week period, that it would count. If you get a $2,000 grant from the EIDL, and you also get the PPP money, if PPP funds are all used for payroll and the grant is used to pay utilities, that is allowed. Okay, so the grant can't be used for any of the covered costs. So it can't be used for payroll, it can't be used for covered utilities, but it could be used for supplies, and such. You just cannot use it. You can't double dip on allowing that expense to be either used by the grant and then used by the cover period. Do number of employees matter when calculating the amount of forgiveness? It matters in that once you determine your total covered costs, and that if you don't have full employment, that it's going to reduce that the covered costs by the amount of employees that you're not at full employment by. So again, back to that example, they had 50 employees, now they have 30. So they lost 40% of their employment. You're going to take 40% times the loan forgiveness amount, and you're going to lose that forgiveness. You touched on interest for vehicle payments being forgiven in your last award-winning episode. Did I understand that correctly? I should include interest paid on vehicle loans. Yes. Again, as I said, PNC and M&T, their guidance is no. My guidance is yes, and I could fight for that because it's clearly shown in the Act. Do a number of employees matter when calculating? I have to answer that one already. We pay resources who work from home, virtual office stipend each month. Can that be included in rent total during the covered period? So I would think that if this was in place prior to February 15th, yes. I don't know about as rent, but I would think if you're reimbursing them for their internet, telephone and such, that would be a covered utility. If you are actually paying them rent for their home office, then I guess you would, but it would have to be in service prior to February 15th. Would interest on a line of credit be covered expense? It's a really good question. There's nothing out there in guidance on it. My view is if you had that amount outstanding as of February 15th and you're paying interest on it, it's a covered expense. If you had nothing outstanding, but the line of credit was set up, and then you borrow those funds after February 15th, is it a covered expense? I'd lean yes, but it's not black and white. Would interest on inventory be considered a covered mortgage obligation? Yes. Are real estate taxes we pay a part of the lease eligible for forgiveness? So again, it doesn't talk about the CAM charges. So, you know, I don't know that answer. I think that's still open to interpretation. I guess it would depend on how your lease is written. If it's a triple net lease and you're responsible for all costs, I think we could probably make an argument that it is rent. And if I was short on my covered costs, I would take that approach, but I would not bank on it. You know, is there an updated spreadsheet? Thank you for reminding me. I have not got through it. It just got published last night. There's one that got published by the AICPA, and I have not gone through it. I looked at it this morning, but I did not have time to go through it. And there's a whole bunch of them, depending on whether you're a seasonal employer, self-employed. So I can't send them all out to you, but if you go to the AICPA website, you do not need to be a member. And just Google AICPA PPP forgiveness calculator, and you'll see all the worksheets. Is our base period average is 80 full-time equivalents? We reduce to 60, but in week 7 and 8 we bring it back to 80 full-time equivalents, no reductions. That's the restoration of the forgiveness, but you still got to have the covered costs. Remember, your maximum forgiveness is still based on your covered costs. So if you only have 60 FTEs, will you be able to hit that loan amount in terms of having covered costs? You know, that I can't answer that based on your question, but you won't have any reduction of your covered of your forgiveness. If somebody was earning overtime and then overtime stopped during the covered period, would that appear as the wages drop? I would say it would not affect that 25% reduction. I think what affects that reduction, if you're paying somebody $20 an hour, normal time, and you drop it to $14 an hour, that's a more than 25% reduction. But if somebody's working overtime, and they were working 60 hours a week, and now they're only working 40 hours a week, that's not going to be a reduction in pay. Forgiveness application deadline is 60 days from the ending of your 8-week period. If someone is receiving EPSL pay, would that reduce their hours worked as part of the FTE test? So if they're receiving the 2/3 pay because they're on that plan, then no, it would not reduce their hours. They're just being paid at 66%, but that's not a covered cost because you're getting the credit on that. Payroll can exceed 75%. Yeah, payroll can exceed 75%. So is the EIDL grant deducted from the PPP loan forgiveness amount? No, it's the exact opposite. So what happens is if you got a $500,000 PPP loan and you got a $10,000 EIDL grant, your PPP loan is $510. Your forgiveness will be $10,000 plus the calculation that you have to do with all your covered costs. The EIDL grant up to 10 grand is automatically forgiven as long as you don't use it for covered costs. Is there any money left after the 8-week period? Can we return the money, and how? The how, I don't know. You have to talk to your bank, and yes, you can return the money, or you can pay it off over 2 years. And you will owe a little interest on it as well. It does not have to be the same employee. So if you replaced an employee, it does not have to be the same employee that came back. It's just numbers. We retain some temporary employees. Do we get to count those costs towards forgiveness? So if you're using a temp agency, I don't think it does. But it shouldn't have went into your calculation in the beginning, so they wouldn't be included as FTEs during the base period or the covered period. But if you're looking to pump up your numbers and they're good employees, maybe you bring them on as permanent employees prior to June 30th. Yeah, and then I think you just followed up. Your next question was, we pay through a temp agency. Yeah, no, you're not going to get benefit for them. The temp agency essentially is going to get the benefit. Mobile phones are included in the forgiveness, but what about if we reimburse employees $50 a month to use their own mobile phones? Does that count towards forgiveness? I would say yes, it does. It's a utility. Compensation to owners. Does this include health insurance, 401k, SCP, as well as wages? I believe it does, yes. Could transportation utility be freight costs? That is UPS, trucking? I don't think so. Like I said, I've yet to find an example of that, but I don't believe that's going to be freight, shipping of your goods. Any suggestion on hourly employees who hours were reduced from 50 to 40, causing greater than 20? Yeah, so I think this is the same question that we kind of talked about. Overtime is not going to affect the reduction of their compensation of more than 25%. It's going to be what their wage amount is. It will not be a reduction of your forgiveness. Our covered period ends June 11th, and we may or may not be back up to FTE number, but we hope to be up by June 30th. So that will help you by June 30th. You're not going to actually want to submit your application until after June 30th, because that would maximize the amount of forgiveness that you have. If you borrow 750 grand and use 600 grand, are you basing your payroll costs at 75% of 600, it would be 75% of the forgivable amount. So since your maximum forgivable amount is 600 grand, it'd be 75% of 600,000. Do we need to accrue for items that are incurred but not paid? Or do we just need to provide justification during the forgiveness? So you're going to have to prove that you paid them in the next billing cycle. So if you have an item that utility bill that you pay after the 8-week period and it was incurred during that 8-week period, you're going to have to show that you paid it. We had a tough fourth quarter 2019, so we reduced our employment in December and January. We cut no one during COVID period, but we probably not sufficient payroll to use the whole amount. Yeah, because in this case you based your loan amount on the previous year where compensation was higher. Your forgiveness should not be affected, because you're going to be able to use the alternative FTE period of January and February. It could be somewhat affected depending on when people were let go in January. Transportation fuel taxes, it's not. It's in my mystery. If I pay a person and they file and they are a 1099, are they included? No, 1099 folks are excluded from covered costs. They can apply for their own PPP loan. When returning to owner-employee compensation is not allowable, are they saying anyone who has any % of stock ownership, or at least 1? Say anyone? I don't know the ownership. I'll save that question and see if I can get back to you on that. Using the 20% that banks generally use. If PPP is used solely for payroll costs and no utilities are used for payroll funds, can we use the 2000 EIDL advance to pay utility? Yes, you can, as long as you just can't double dip. We are considered a distribution to members of the LLC. We have been fortunate to be able to continue operating using funds beyond the amount we received in PPP fund. Would there be any issue processing this distribution within the 8-week period? Not technically. There's some SBA programs that prevent the distributions, but not this. So I would say no. As long as your loan's under $2 million, you don't have any risk of saying that you couldn't take that loan. We are truck company. Is fuel considered a covered expense? It is not. Schedule A worksheet required to be filed. It is, yes, you will need to file that. Construction sites in PA were shut down for most of the 8-week period. What can we do? Well, this is where I'm hoping that you get an extension of that 8-week period. Other than that, you're giving the money back, unfortunately, because you don't have employment. You're not going to have any covered costs. So, just like the restaurant industry, hopefully that'll help the PA construction industry, because construction, hasn't been shut down in most places other than Pennsylvania. My buddy, why did I shave? I had to shave. It was itchy, and my kids were getting scared. He's got another joke, but I won't say that one. When referring to the employee owner compensation is not allowable, are they saying anyone who has any % of stock ownership or at least 20%? Again, that's a question. I got to get back to that. If I have a union benefits that are not due till the following month, is that included? And do I need to make sure it's paid prior to my 8 weeks? No, I think you're going to have time as long as that's paid within the normal billing date. Did you say truck fuel is included or excluded from forgiveness amount? Truck fuel is a non-event. It's for this purposes. It's not a covered expense. are software rentals deductible towards the PPP loan and QuickBooks? So software rental. So if they're usually listed as like maintenance agreements, but if it's actually a lease agreement, then I would say yes. Your QuickBooks subscription, I would say no. But if you have software that you're leasing, I would say yes. What if I needed the software to get the staff set up to work from home? Again, if you're releasing the software, I would say yes. It all depends how that agreement's going to look. But that lease agreement is going to be effective after February 15th. So if you had to get a piece of software that allowed you to work from home on April 1st, it's not going to qualify because it wasn't in service on February 15th. I think that's it. I thank you for your time. My guess is we'll be doing this again, probably sometime in late June when I think there's going to be some more congressional. Please reach out to our team members. Remember, do your calculation today. Know where you stand so there's no surprises. If you want us to review your calculation, please get in touch with who you work with. My guess is they're probably going to funnel it to me or Sam or Kathy in our office because we've been doing most of this work on this. But make sure you take advantage of this because this is a once-in-a-lifetime opportunity, regardless of whether you're in good shape or not such good shape. It's an opportunity that you have to take advantage of. So I wish you guys the best. You all have a great Memorial Day weekend and have a great day. Thanks. Bye.